On oil, a big down day. Again, it comes on headlines that allegedly Israel's going to avoid military and nuclear targets. That doesn't mean that they may not hit them. I hope you know that. That doesn't mean that they may not hit them and not really even meaning to hit them. I don't know what's going to happen there. All I know is what I'm going to do with my process and my risk range and the processing of what is this oil move. The first thing you should note is that it broke trend. Okay, so trend for WTI is 73.19. That doesn't really matter to me because I'm not long oil. But again, oil is the weakest of the commodities that are bullish trend. I'd much prefer to buy copper. That's why it says that right there on the screen and why I repeated what it says on the screen. Sometimes I have to do both. But of course, oil is what it is. It's also signaling a big higher low in the risk range. Now, there was a day when the low end of the risk range on oil was like 63, 64, 65. Now, the low end of the range is barely under 70. And you're right around that level right now. So a big higher low at 69.40 at the low end of the range. This is not for the faint of heart. This is why I'm not long it, by the way, because oil has a volatility north of 50 on front month. And there's no need to buy that when I can be buying anything else in commodities that doesn't, which includes actually crypto, certain crypto, and certainly Bitcoin. So you got that. Just to be paying attention. What I'm really interested in doing is buying energy equities. So DRLL, drill will be the number one, followed by XLE in terms of asset allocation decisions. So maybe I get bang, bang, back-to-back down days for energy. Don't forget that energy was the only sector that was down while SPY Monkey was making an all-time high yesterday. When you think about that on the bongo board, you can see it. Interesting day. Like I'm long Qs, I'm not long XLK. For reasons that I've stated. I just don't like the concentration risk of three stocks in XLK, but that's what gave XLK yesterday. The impact of those three stocks was 31% of the S&P 500 yesterday. So you can see that monster impact. But I'm long Qs, which were plenty good on the day. And whether it's tech or utilities, those were actually the two best places to have your hard-earned capital yesterday. So again, what people do now is like, oh yeah, I remember the whole theory of needing utilities because I like AI, and if Nvidia goes up, I got to buy utilities again. And now we got bond yields down this morning, so you're going to buy more gold, more utilities. But again, that's the whole point of having a portfolio. There's diversification, so some days you can be buying utilities, like when they were for sale, when we were doing that last week, and now we sell some, we feed the ducks on both Qs and utilities, and that's how we do it in Quad 3. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.